Berkshire Hathaway recently reported their 13F filing. That's when they disclose exactly what they own in public markets, all the stocks that they own. There's a $266 billion portfolio. That portfolio has been dominated by Apple over the last half decade or so, but that's really starting to change. Buffett is selling shares of Apple, and what is he doing with it? He's holding cash. But I want to get into the moves and what exactly is in this portfolio because Buffett is always somebody we can learn from. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at this portfolio overall. And here you can see an overview of the portfolio. 26.2% is still in Apple stock, but that was over 50% just a few quarters ago. So that number is starting to come down. What's interesting about those sales is that that money is not going into new stocks. It's just being held in cash. There's now $320 billion in cash on Berkshire Hathaway's balance sheet. The second biggest holding is American Express. That's a company that Buffett has been holding for decades. Bank of America, also another long-time holding, and Coca-Cola. Buffett has owned that since the 1980s. So a lot of big positions are largely legacy positions. These are not at all new positions for Buffett. The two that jump out to me here is actually Chevron and Occidental Petroleum. That's part of a move into more energy companies, oil and gas in particular for Buffett. That's been happening over the last few years. I think he sees a lot of value there. And one of the reasons is I think there's a lot more duration for the use of oil and gas than a lot of people in the market are thinking. There's a lot of speculation that we're going to be transitioning to renewable energy, electric vehicles. That probably is going to take decades. That's why these shares have been relatively cheap. But let's go through some of the moves in these positions recently. The first one that I want to look at is Apple. Now, Apple is a stock that they started buying in 2016. The position that Buffett built was primarily built late in 2017 and early in 2018. You can see that here. And then it's largely stayed the same. The reason that the increase in shares happened in 2020 is because Apple did a share split. So that's why the number of shares owned increased over that period of time. But you can see over the past 3 quarters, this position has gone from 49.5% of the portfolio to just 26.2%. So it's worth looking at what Buffett is seeing in Apple in particular. And because I think this really shows why he's selling shares of Apple and why he's not doing anything else with the funds. This is Apple's hardware sales. So you can see in blue, iPhone sales, that's a majority of the company's hardware sales, Mac revenue, iPad, and then wearables, homes, and accessories. The big piece of that is going to be AirPods, but that also includes HomePods, as well as the Apple Watch. Those are kind of the big products in those segments. But you can see the revenue peaked in 2022. So during the pandemic, there was a big jump, not only in the prices that Apple was charging for things like iPhones, but also in the volume that they were selling. That has come down over the past couple of years. So that's a sign that the business is not what it once was. Where is their growth for Apple? Services revenue has been the big growth driver for the company. This is all of the digital services that they provide. It's the 30% fee when you buy something on an Apple device. It's Apple TV. It's the money that they get from Google for being the default search engine. But really, it's kind of like a tax that Apple has on the iOS ecosystem. And this is one of those things where if the ecosystem is growing overall, it's not really that big a deal because everybody's happy. But right now, we're seeing growth in the ecosystem. The number of hardware devices being sold is starting to come down. So now everybody's worried about, okay, the ecosystem isn't growing. The number of iPhones and iPads and Macs isn't necessarily growing, at least like it once was. So now Apple's trying to take more and more money from developers and partners. That's problematic. And it's problematic because Apple stock is more expensive than it's been at basically any point since the iPhone came out. You can see that back when Buffett was building this position in Apple, shares were trading for 10, 11, 12 times earnings. The price to sales multiple was 2 or maybe 3 at the peak. Now that price to earnings multiple is 38. And the price to sales multiple is 8.7. That is just an incredibly expensive multiple, especially for a company that's growing more slowly today than it was when Buffett was building this position. So that's why Buffett is selling shares of Apple. Shares have just gotten too expensive. And he's saying, you know what? I'm out. I'm going to go look for better opportunities. And the best opportunity that he's seen today is just holding cash and holding treasuries where there's a consistent rate of return. So what he's telling you with this is that the market is getting really expensive. And that's something that I think we can all learn from right now. If you see stocks that you have that aren't growing like they once were, but the stock's still really expensive, maybe it's time to trim that position just like Buffett is doing. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. But there's a couple of other positions that I want to go over. And this table shows where there was changes in the top 15 positions for Berkshire Hathaway. So you can see the top one, the number of shares of Apple was down 25% quarter over quarter. The other big sale was shares of Bank of America. Again, Buffett built this position a long time ago. This chart goes back to 2017, and you can see that the position was actually increased in 2020 and has now started to come down. So why is he selling shares? One reason could be Bank of America just isn't performing as well as it once was. The other reason is that shares are just more expensive than they were at least a year ago. Now, going back, this has been a pretty volatile stock from a valuation standpoint, and metrics like price to earnings and price to sales aren't a perfect metric in the banking industry. That's why I put price to book in here. This is the thing that Buffett has always pointed to when judging Berkshire Hathaway is say, hey, look at our price to book value. And am I increasing that book value? So you can see that going back to 2016, 2017, Bank of America was trading for less than their book value. That is considered a value in the banking industry. But today, that multiple is now over 1.3. So maybe Buffett is saying, hey, I'm not seeing the same growth, the same profitability, net income's not moving in the right direction, and the valuation is relatively high for Bank of America. So I'm gonna start pulling some chips off the table. But there was one buy in the portfolio, and that caught my eye because that is SiriusXM. Now, shares of SiriusXM are down almost 70% from their peak, and the market cap's under $9 billion, but that's where Buffett may be seeing an opportunity. You can see from this chart, the company has been consistently profitable and is generating positive free cash flow. You can see that over the past year, $919 million in free cash flow. That means that shares are trading for a little less than 10 times free cash flow. So that's where Buffett is seeing some value. That's a more normal price to earnings multiple for Buffett to be buying shares of a stock. It's when is it trading for more like 10 to 15 times price to earnings. The thing I'll point out with SiriusXM is revenue is on the decline. So this is not a business that is growing like you would want to see. And I personally don't think it's an attractive value, but Buffett obviously disagrees, and it is kind of in that value zone based on a lot of metrics. So selling companies that look relatively expensive to raise cash, deploying a little bit of that to buy companies like SiriusXM, but given the amount of money that Buffett is selling just in that Apple stake, he could buy all of SiriusXM and have plenty of money left over, $320 billion left on the balance sheet just in cash and cash equivalents. So really interesting to see what Buffett is doing today. What I take away from what he's doing with the portfolio is that he's getting really conservative. And typically when he does that, he's raising money because he's uncomfortable with the prices that he needs to pay for stocks. So he's not only keeping the money that's coming through in dividends and things like that, he's also selling some of those stocks he thinks are overvalued. So maybe worth taking a little bit more conservative approach in your portfolio. But let me know what you think about what Buffett's doing in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.